Have you ever taken a moving average signal only to watch the price reverse and hit your stop loss? What if your moving average could actually adapt to market conditions instead of reacting the same way all the time? In this video, I'll show you how KAMA works and how to combine it with RSI to filter weaker signals and find better entries. By the end, you will have a simple trading setup with clear entry rules. Stay until the end because I've got a quick quiz to test how well you understood the strategy. So let's get started. Before we begin, let's reveal the answer to the quiz from my previous video. The correct answer was C. Wait for RSI to move back above 50. Alpha trend is green, so the direction is bullish, but RSI below 50 means bullish momentum has not been confirmed yet. We wait for RSI to cross back above 50 before considering a long entry. If you got it right, well done. Now let's jump into today's lesson. What is KAMA? KAMA stands for Kaufman Adaptive Moving Average. Like other moving averages, KAMA helps us identify the market direction. But unlike a traditional moving average, KAMA can adapt its responsiveness to changing market conditions. Let's add it to the chart. Open TradingView, go to the Indicators section and search for Kaufman Adaptive Moving Average or simply KAMA and add it to your chart. For this strategy, we'll keep the default input settings. Then go to the Style tab, change the line to yellow, make it slightly thicker for better visibility, and then click OK. Now look at how KAMA behaves as price moves. When price is moving smoothly in one direction, KAMA can follow price more closely. But when price starts moving back and forth without a clear direction, KAMA becomes less responsive to these short-term movements and can stay farther away from price. This helps KAMA avoid reacting to every small price movement. That's the key idea behind KAMA. It's designed to respond differently depending on how price is behaving. And this can make it useful for identifying the overall market direction. Using KAMA to read market direction. Now that we understand how KAMA works, let's see how we can use it to read the market direction. Look at this part of the chart. Price is above KAMA and the KAMA line is moving upward. This gives us a bullish bias, so we mainly look for long opportunities. Now look at this area. Price is below KAMA and KAMA is moving downward. Here the market has a bearish bias, so we focus on short opportunities. But there's an important point. A simple price crossover is not enough for an entry. Look here. Price crosses above KAMA but quickly falls back below it. These quick crossovers can happen frequently when the market is moving sideways, giving us weak signals. So instead of chasing every crossover, we can wait for price to move back toward during an established trend. This pullback can give us a more controlled opportunity to enter. KAMA pullback setup. Now let's turn this idea into a simple entry setup. Instead of entering immediately after a move, we wait for price to pull back toward KAMA. But a touch of KAMA alone is not enough. We want to see price react around this area and begin moving back in the direction of the trend. For a bullish setup, we'll look for price to hold around KAMA and start moving higher again. For a bearish setup, we'll look for price to react around KAMA and start moving lower again. But there's still one problem. A reaction around KAMA does not always mean the trend will continue. Sometimes what looks like a pullback can turn into a reversal. So we need one more confirmation, momentum. That's where RSI comes in. Think of it like driving a car. KAMA tells us which direction the road is going, while RSI helps us see whether there is enough fuel to keep moving in that direction. So KAMA gives us the direction and RSI helps confirm that momentum. Now let's see exactly how we can use RSI to filter these pullback entries. Adding RSI. Now let's add RSI to the chart. Go to the RSI settings, keep the length at 14, change the upper band to 50, and leave only the RSI line and the 50 level visible. But why 50? Because we are not using RSI here as a traditional overbought and oversold indicator. Instead, we are using it to confirm momentum. When RSI is above 50, the trend is bullish. When it's below 50, the trend is bearish. KAMA answers one question, which direction is the market moving? RSI answers another, does momentum support that direction? When they agree, we have a stronger setup, but when they disagree, we simply wait for better conditions. Now let's put everything together and see exactly how to enter a trade using KAMA and RSI. Long setup. Let's start with the long setup. First, we want the market to be bullish, so price should be above KAMA and KAMA should be moving upward, and RSI should be above 50. Look at this example on the chart. Price is above KAMA and KAMA line is clearly pointing upward. RSI is above 50. So our overall market direction is bullish. But we don't want to buy immediately. Instead, we wait for a pullback toward KAMA. Now watch what happens. Price starts pulling back and at the same time, RSI moves below the 50 level. We don't enter here. We simply wait. Why? Because the pullback is still developing and we want to see whether bullish momentum returns. Now look at RSI. It crosses back above 50 while price is still holding above KAMA. This is the confirmation we were waiting for. The trend is bullish, the pullback has been happened, and RSI is showing that bullish momentum may be returning. So we can consider a long entry here. For the stop loss, we can place it below the recent swing low, and for the target, we can use the next resistance level or a 1-to-2 risk to reward ratio. Notice the sequence. KAMA gives us the direction, the pullback gives us the opportunity, and RSI confirms the momentum. We wait for all three pieces to come together. If this setup is making sense so far, hit the like button. It really helps the channel, and now let's see how the short setup works. Short setup. Now let's look at the short setup. The logic is simply the opposite. First, we want price to be below KAMA and KAMA should be moving downward. RSI should be below 50. This tells us that the overall market direction is bearish. Look at this example. Price is below KAMA and KAMA line is pointing downward. RSI is below 50. So instead of looking for long trades, we focus on short opportunities. But again, we don't want to chase the price. We wait for a pullback toward KAMA. During this pullback, RSI moves above the 50 level. We don't enter yet. We wait for the pullback to lose momentum. Now look at RSI. It crosses back below 50 while price is still below KAMA. This is our confirmation. The trend is bearish, the pullback has been happened, and RSI shows that bearish momentum may be returning. So we can consider a short entry here. For the stop loss, we can place it above the recent swing high, and for the take profit, we can use the next support level or a 1-to-2 risk to reward ratio. So remember the pattern. KAMA gives us the direction, the pullback gives us the opportunity, and RSI confirms the momentum. Quick quiz. Alright, before you go, let's do a quick quiz. Imagine KAMA is moving upward and price is above KAMA, but during the pullback, RSI is still below 50. What should you do? A. Buy immediately. B. Sell immediately. C. Wait for RSI to cross back above 50. D. Enter the trade based on KAMA alone. Write your answer in the comments. I will reveal the correct answer in the first 30 seconds of my next video, so don't miss it. And if you found this strategy useful, check out my other videos where I combine RSI with different indicators to build simple trading setups. If you want more strategies like this, consider subscribing. Thanks for watching and I see you in the next video.